could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some analysis and some updates for Bitcoin. I will then go over the total crypto market cap excluding Bitcoin and Ethereum as a preface for the altcoins, and then I'll go over XYO, JASMY, CA Coin, THETA, and then I'll jump into talking about SPX and gold. But to go ahead and get it started here, the first thing that I actually want to talk about before I get into the analysis here is this tweet by Jesse Myers here on Twitter, or X. It's really just a very informative, in a nutshell, tweet. But anyways, what he says is massive net inflows to Bitcoin from the ETFs are continuing at about an average of approximately 9,000 Bitcoin per day over the last week. The fact that price has gone sideways for the last 2 days means significant sell side supply on order books at 52K. He has just a picture here denoting clearly. Kind of stalled out recently in the last few days at around 52K. He then goes on to say, if not for ETF demand, 52K would have been a local top rejection or a dip. Try to break again in a few weeks or months if this ETF, this institutional demand, was not in place. With ETF demand, we're just eating through the available for sale supply at 52K until there's none left. At that point, price has to jump to the next price level where there are willing sellers. He questions whether or not 58K could be the next rough range for Bitcoin to reach over the next weeks or month or so. So long as ETF demand is 10 times the daily Bitcoin in issuance, right now currently 900 Bitcoin per day, we are truly in a different market. In the halving, which will take us from 900 to 450 Bitcoin per day in around 2 months, will amplify this imbalance further. Then finally, he says, so long as the above conditions remain true, up or sideways only price action will entail. And I would add there that it's definitely, I 100% agree with everything he said, but I would add that it's definitely possible, which he didn't mention, that we could see Bitcoin not necessarily just go up or sideways. It could have just a very minor downwards tilt, just a minor degree towards the downside, but overall I still think he's correct in saying up or sideways, as long as this ETF inflow and buying pressure continues to remain. As for this final picture down here, we can see this chart right here details the ETF inflows. Here on the top we see with this little key down here, we have the iShares, so BlackRock, Fidelity, Bitwise, ARK, Franklin, so on and so forth. Up here we see all the inflows, the money going into Bitcoin, raising the price from the 11 Bitcoin spot ETFs that were approved on January 10th of last month. And then down here on the bottom we have the Grayscale outflows, the selling that the Grayscale Bitcoin Trust has been doing since around first month of this year, around the ETFs being approved. And we can see here clearly that ever since this selling began, that while Grayscale has been selling, all of these ETFs have been basically buying that back up. And even here recently, going back to right here around the 6th of February, we've seen roughly around the 25th, 26th, 27th, 28th, end of January, this Grayscale selling was starting to die off a little bit. Most of this is Grayscale. Some of it is the ProShares, as you can see down here, the ProShares Bitcoin Strategy ETF. But for the most part, Grayscale has been selling, and then around late January, it started to die off a little bit, and the ETF, the new ETF inflows were still quite high. They died off a little bit around early, first week or so of February so far, but you can see that the Grayscale and other selling off has really died off at this point, while we've seen basically since the 6th of February that the ETF inflows for the 11 have been ramping up basically for almost around 16, 17 days at this point, or around, well, I guess more around 10 to 15 days at this point. It's died off a little bit recently, but for the most part, it's still roughly staying in the same ballpark. Overall, this is absolutely massive. I mentioned on a community tab post the other day about how with these ETFs, with the fact that there is a Bitcoin halving in about 2 months, most likely it seems to be happening mid to late April, could happen around or maybe early May, first week or so, maybe even in the halfway May, but mid to late April seems most likely at this point. That when we move, as he said, down to 450 Bitcoin issued due to the halving, that I think we're going to see a very massive supply shock here. With the so far we're seeing this massive institutional interest with these Bitcoin ETFs, BlackRock, Fidelity, Vanguard, ARK, etc., buying up a lot of Bitcoin at this point. I actually think, if I go back to this tweet, I think this is what this chart appears mentioning. I'm not too sure if this is what these numbers mean, but I'm going to go ahead and go on a limb here. I will, if I make a mistake, add it in some sort of text when I'm editing the video. But if this is correct, the total amount of Bitcoin that BlackRock has right now is sitting at around 115,000, Fidelity 83,000, Bitwise 22,000. So I mean, they've accumulated a lot of Bitcoin. I will touch on an article towards the end of the video that will further talk about the billions of dollars that has been put in so far since these ETFs were approved. But what I was saying was, again, with the supply shock, I think we're going to see a massive supply shock with what he said about just upper sideways, maybe slightly down, some slightly downside price action. And I think we're going to see a bull market. Again, I think it will be similar to the prior bull market, which goes back to my phase cycle theory that I've been talking about on this channel for quite some time. But overall, I think that we are going to see a bull market quite different from past bull markets. So to go ahead and get into the analysis here, this is the 2-hour chart here for Bitcoin. We can see this uptrend right here going all the way back to January 23rd when Bitcoin was at around 38.6 thousand. From there to our current time has moved up to approximately 52, at the highest is 52,700. And we can see here currently, this right here, far left, this is when the ETFs were approved around the 10th. So as we're seeing right here around the 8th, 9th, 10th, ETFs were approved in this area right here. Then the price trickled down to, as I mentioned, around 38.6 thousand. And again, as I mentioned on a community tab post recently, I think that there's very good reason to believe that at most significant, well, not necessarily most significant, but there's very good reason in general to find a pullback or a drawdown somewhere to around 47 to 49,000. We take a measurement here, that's going to be roughly at the lowest around 10%. Now I mentioned around 10 to 25%. I don't think it will go, if we do see a significant pullback, significantly below 25%, pushing 30% at highest at this point. So I mean, if we move this down, 25% basically sits back here at around 38.6, 38.7, 38.8 range. This local low we set back here. Now just entertain that 30% drop. That's going to sit us around 36.2, and then as I've been mentioning, the 20 to 40% rule in Bitcoin bull markets with past history, which again, as I was mentioning, due to this ETF interest, institutional interest, and the fact that, I mean, really the retail investors has not really picked up that much yet. So especially when most of the retail gets back into it, it's going to even be more buck wild or crazy than just this institutional interest. But let's just entertain a 40% drop from where we are. Let's say we have set a local top at around 52,000. 40% is going to put Bitcoin right at around 31,000 to 31.5 thousand, which again, as I've been mentioning for maybe at least a month, maybe 2 months along at this point, around 30,000, I think is the bottom of the barrel for the most significant pull down or retracement at this point. If we take a look here at the RSI, we can see that it's sitting right basically with respect to this fib retracement that I have on here in the golden pocket. It's sitting roughly around 48 to around 64, so it's sitting roughly in the middle. So I mean, at this point it could continue sideways, it could draw down as I was mentioning, and it could also go up. If we look here at the stock RSI, it's relatively low. It could be flipping upwards here, but we could see something along these lines where the stock RSI stays in this low range, the RSI dumps, and we see the price come down by, some degree, as I was mentioning earlier. And then essentially the same thing for the MACD. If the price decides to dump, the MACD will dip lower. If it doesn't, the MACD will go higher, obviously. Here for this daily chart, what we see here, this orange trend zone, zoom out real quick. This is what lines up with. This is the trend line, the main one being this lower one right here, as you can see, that has characterized the uptrend since around 15.4 thousand here, going back to late November of 2022. And we can see here, zooming back in, that with these recent highs right here, these three, that we've been finding rough resistance along this upper trend, generally with this trend zone. And as I mentioned on a community tab post, we are finally starting to see some sort of price action dying down. I really got to zoom in here to show this. I'm not sure why it's doing this. Only some of my charts and only some of the certain chart layouts that I have do this. But if you notice here, zoom in even more, you can see how typically my candles bullish candles are going to have white wicks. And then you see this candle right here, this purple one, or blue, however you see it. And this red one, they have black wicks. So it's going to be obviously white wicks are bullish candles and black wicks are bearish candles. But we see this green candle right here, clearly a bullish candle, but yet the wick is black. And you can see, and I went back throughout the history and started to notice that, like, whenever I see this on the charts that show it, it's indicating some sort of the buying pressure is dying down, and we're going to see some sort of sideways, as we saw here, maybe even a more significant retracement. I can go back and show you right here. We can see these bullish candles, and we see this candle right here. It has a black wick, and then we went sideways for a bit. I go to right here when the ETFs were approved. Right here we see these three yellow vectors. We see this this white high volume vector candle. Would have been a bullish candle, yet it had black wicks, as you can see. Then we saw this 20% drawdown right here, the most significant one we've seen since moving up here recently, since around August. And now if we zoom in to where we are currently on the current daily candle right now, still has around 18 hours left, 18 to 19 hours, but currently, and then it could change, but currently you can see bullish candle, but yet you can see this wick right here is black. So again, I think that's further confirmation. We're going to at least see some sideways, maybe a drawdown, as I was mentioning, on the lower time frame chart, or again, it could change and it could just completely skyrocket here, continue to go towards the upside. I don't think it's definitely not entirely off the table, especially again with this institutional interest in the ETFs. If we look here at the RSI, you can see it's oversold compared to this kind of wavering, this staggering upwards price movement we've been seeing recently. So I mean, we could dip down again, as I've been saying. Here for this other daily chart, this is one that I've been updating recently. Really not too much to add here. This kind of just goes over the general picture. Again, right here, we could go down around 30,000, which would be the 40% drop. And then again, I still just want to mention it, for whatever reason, actually, no, my bad. Right here is around 36 or 35 to 36,000. Then right here in this red bubble is around 30,000, which would line up with this 400, 600, and 800 EMA triplet EMA estimated moving averages, basically acting as a band that I have been using there. So to entertain the fact that, let's say, even though I mentioned as it's dying off, but no, I'll actually zoom in here. You can see, maybe you can notice, none of these candles that I pointed out on the prior chart, the prior daily chart, have these black wicks. Like I said, I'm not sure why it's doing that, but the ones that are doing it, it's definitely showing a clear indication that when that happens, the price starts to, the strength of the upwards price momentum starts to die off. Now, what we could see here is basically, like for example, let me just take a little fractal pattern here and show an example. We could see something along these lines where we're kind of just going to, for a short period of time, stall out here, and ultimately we're going to break above this median line of this pattern I've been going over, and we'll continue to move up towards the upside here. In that tweet, he mentioned 58K, which would look something along these lines. Obviously, you know, this is if it happens, if it hits 58K around the 24th end of this month, last week of February. You know, I mean, it also could end up pushing back up to the top of this this broadening channel. If you want to look at it as a megaphone, it's clearly not technically a megaphone. It's not even technically a rising wedge, but what we're seeing here is a wedge-like pattern that is broadening over time, and clearly is acted. It's the trend lines and the trend zones have clearly been important as I've been updating. Now, if it moves back to the top, you know, by around the end of February, it would basically put Bitcoin back at the all-time high range, around 65,000, so around 64 to 69,000. I mean, if it were to happen, you know, let's say within the first week or so of March, it would push around 70,000. Just depends upon when that's going to happen. Clearly, inherent to the pattern, the longer it takes to move up, the higher the price is going to be if it indeed moves back to the top of this pattern. Here for this daily chart, here we have this fib channel that I've gone over in the past at some point. The main thing that I want to point out here is you can clearly see that even going back to right here, around the 10th of September 2022, rejection, we had our all-time absolute bear market bottom right here as far as I'm concerned. We then touched the top of it again, April 14th of 2023, went sideways, bobbing and weaving from around 30 to 25,000. And then recently from August right here, or August, September 2023, we've been moving up as I've been showing. We hit the top right here around the ETFs, and now we're hitting it again. You can see, technically we've already closed 2 candles above. I think that's clearly a good thing. So at this point, when it comes to, I'm not particularly, I'm more inclined to seeing sideways movement in a minor retracement rather than a more drastic retracement, which drastic would be around 20 to 30%, 40% obviously, but I'm thinking 10 to 15% is, you know, more feasible, which again, I was saying would take us around to around, like, let's just say around 46,000 approximately, give or take like $1,000. But it's, I think, very critical that we are testing the top of this. What happens is going to be very important over the next, you know, week or two, maybe just over the next month or so. Here for this weekly chart, we have the exact same channel here, but what I want to point out here is, clearly as I was pointing out, we've already technically closed, just not really strongly above this channel. We look here at this weekly version, we haven't done it yet, but I think whenever we finally close a weekly candle above this channel, this will be a very good bullish indicator. Currently there's a 1 day and 19 hours left in this candle, so it could do that, it could not, but I definitely think within the next 2, you know, maybe 3 pushing it, weekly candles at Bitcoin, depending upon whether or not we get a significant pullback or not. But I think within the next month or so, there's a good chance we'll see Bitcoin move significantly above this channel and eventually close below it. Looking here again, this weekly chart, we see we have this final vector, this volume control zone corresponding to the vector candles of the trader's reality indicator that I use. So right here, just to kind of increase the range, because it's not showing the full candle, given that this candle right here kind of made up or covered it to some degree, but to give the full range of this candle, 51.8 thousand to 59.5 thousand is the final vector range on this weekly chart that needs to be recovered. So far, we've only wicked a little bit into around 51.7. As I said, it went to around 52.7 at highest on an earlier lower time frame chart. So at this point, whenever we see on the weekly, or whenever you guys on your charts on the weekly see Bitcoin pushing above 59.5 to be a little bit more precise, but especially 60K being a nice psychological and whole value, I think that's going to be very, very big. It will start to get candles closer to closing above the candles back here from around March to April and May, when Bitcoin was hitting 58.6 up to around 64.8 thousand. Again, that's going to be very, very important. Again, I just want to mention this. I already mentioned it on the community tab, but there is potential bearish divergence we could be seeing here, but especially again with the ETFs and other technical reasons and other socioeconomic reasons, this definitely does not necessarily have to play out. And for all we know, this Bitcoin could continue to move higher here, and we could see the RSI continue just to move up and then basically invalidate the potential bearish divergence we are seeing currently. And then here for this 3-week chart that I've gone over in the last video, maybe the last two, I'm not going to spend too much time on this as I've already gone over it, but one thing that I did add was this this vertical yellow dotted line. Zooming in here, I think this is, again, just continuing to harp and reiterate the ETFs and this massive institutional interest. This is the first time in history that I believe, which is not in Bitcoin's past history with the prior 3 halvings, Bitcoin never went above the prior cyclical all-time high, or phase cyclical all-time high prior to the halving. It always happened after the halving. So due to these, the inflows of the ETFs, etc., I think that this is definitely for the first time in history that Bitcoin could go higher than 64 to 69,000, if not close above that before the halving. This is, again, the 3-week chart. There's still 15 days, 19 hours left in this current candle. There are 2 candles before this vertical line, which sits right in the middle of April. Again, it depends upon when, like for example, if let's say that it happens, the halving happens like early May, we move this over a little bit and there's more time for it to happen. I think if you move it over to around early May, it's definitely likely at that point, unless we get a significant pullback here. But at this point, there's either 2 to 3 bars, 2 to 3 candles that we still have. So basically about 6 to 9 weeks before, or 6 to 9 weeks for Bitcoin to continue to push higher and push above and make a new all-time high prior to the halving, which has not been done in its past history. And then lastly, for Bitcoin, here on this weekly chart, I have this fib channel, which I drew this with respect to this wick low back here, July 10th, 2017, to this phase 2 of cycle 2 all-time high, approximately 20,000, December 11th, 2017, down to the bear market low of phase 1, cycle 3, December 10th, 2018. Clearly can see how insanely accurate and very pivotal this channel has been, and showing where Bitcoin is going to go. Now we can see here that clearly this all-time high reached the top. This one right here also reached the top. So if we do something similar to that, it again further validates my predictions of around 100. We can see in this little weird looking shape I have drawn up here, that it confirms around 180,000 to at highest 250,000, pushing to around at latest December this year. To go back to this chart here again, those of you familiar will already understand this, but this right here is the fib range. As you saw before I zoomed in on this chart, the Bitcoin's hit this every single time for all of its all-time highs. The 2.321 right here is what corresponds with our current phase, and the current cycle 3 being phase 1, where we see a massive W, and then it leads into a lightning bolt type shape, or which would be technically an ABC or ABCD pattern. And we're going to see something again similar to this bull market we saw back here, except this time around it's just going to be a little bit more decayed due to Bitcoin having a logarithmic growth decay factor over time, which is why the cycles, the phases, etc., they lengthen. Bull market's less bullish and the bear market's less bearish over time. But the 2.321 lines up at around 225,000, so I'm approximately 225,000. So is I think the sweet spot's around 200 to 230,000, and then 180,000 at lowest, I think is quite likely. Which again, this confirms. So when it comes to the time, I'm still leaning to within this year, Bitcoin making of the bull market we're in, Bitcoin making this all-time high within the year 2024. Let's say that's wrong. I think if it does bleed into 2025, that it will top out no later than quarter 1, the first 4 months of 2025. So the last thing that I want to go over for Bitcoin before I jump into altcoin analysis is this right here. So if we, I'm going to pull out a calculator here real quick. I did this the other day. I vaguely remember the numbers, but I want to be precise here. So if we take, according to my phase cycle theory, this is what I've been doing. So from the March low down to this area here, we see 26 bars. So what would correspond with our more recent price action would be this right here. So what we see is 26 bars the 42 bars. So if we do 42 divided by 26, we get a ratio of 1.6154. So those of you who maybe already catching on here, 1.6154, that's basically the golden ratio, 1.618, which is very interesting nonetheless. I think that's very intriguing. So if I then use this ratio and I do it so from the low to this high right here, 57 bars, and then I do this 1.6154 times 57, we get 92 bars. And if I do that from this low, that takes us out to 92 bars, being late August, specifically August, the 26th of August of this year. Bitcoin will have topped out on this day. I don't think it's going to be on this day, but just roughly around this day. So that's what I've been saying. Around July, August is currently, with my most recent updates, factoring in the decay and the ratios here that I just mentioned, that we'll see Bitcoin top out around this point. Now, as time progresses, especially if Bitcoin sees a pullback, especially a more drastic 30 to 40%, 25 to 40% pullback over the next weeks or so, then this is going to likely increase, which will then start to push it more towards the end of this year. And if it continues to further decay, as I mentioned earlier, we'll quite likely push it into Q1 of 2025. But I just wanted to mention that because I find it absolutely astounding that when I do that, it gives you the ratio of basically 1.618. There's one other ratio that I was taking, which I do this right here. We see 38 bars to this first kind of local high area right here, November 30th of 2020 after the March crash. What would correspond with us currently would basically be this right here, when roughly around when the ETFs were approved. We see 59 bars. So again, we have 38 to 59 bars. So if we do the math here, we get a ratio of 1.552. So again, when we average this out, we're sitting around 1.58, still roughly close to the golden ratio, especially with that first one, clearly, which again, my golden pocket basically sits around 1.5 to 1.618 on the smaller side. But jump in here to the total market cap, excluding Bitcoin and Ethereum. First thing I want to go over is, again, as I said in the last video, I think around 4 to 10 trillion is where this is going to top out at. Now, I think when it comes to the entire crypto market cap, it could go as high as 16 trillion, as low as 10 trillion. Now, factoring in where Bitcoin could be and where Ethereum could be, it's around 6 to 7 trillion. So then I would have to subtract 6 to 7 trillion from 10 to 16 trillion, which is what gives me this around 4 to 10 trillion range. That's why I have this box up here. And again, I just want to point out, so I've already gone over this, but it's been a while. So we can see here, this last, this bear market right here, we set this massive double bottom, and leading into the all-time high, we had the initial dump right here, then we entered this accumulation range, and then eventually broke above it right here. We're seeing basically essentially the same thing, just a little bit different structure, where we see come down, we test this yellow trend, or this horizontal line, come back up, and then dump back down. Basically what we saw right here, as far as I'm concerned, essentially the same thing. Then we had the bull market highs, we ranged sideways a little bit, then we entered this accumulation zone. Now we're breaking above it, and I think it's just, again, astounding to see how we kind of just see this very subtle kind of just like dip, this very subtle U-like shape right there, and we're basically seeing the same thing right here. Same thing right here currently, only so far it's looking like it might not last as long, especially if Bitcoin, etc., Ethereum, altcoins continue to go up here. And even if we take a look here at the RSI, we can see going back to the all-time high, it's set January, basically January 1st, just about 2018. You see the bull market ensued, it could not get above the 786, and as soon as the RSI got above the 786, it's what lined up with this very slight U above this horizontal line. And basically we are seeing the exact same thing here, where, let's see right here, going to the top, April 12th, 2021, came down, could not get strongly above the 786, accumulation right here, and recently we've gotten above the 786, as we're getting above this horizontal line, and we're setting that subtle dip U-like shape, and then continuing to move towards the upside here. Stock RSI, simple. As long as it just continues to stay within this rough area right here, it will continue on a bull market. As long as you can see back here, it doesn't get drawn out really low, it's not going to be a problem. Looking here at the MACD, everything looks great. It's above the 0 point. We could possibly be flipping up here a little bit more. So we could see just, again, like a minor dip and then we move towards the upside here. Or, maybe we're going to set some type of double top and then move a little bit lower, hold the 0 point would be the best case scenario. If it dips drastically below that, it's not going to be too good. But that was just a preface to show that altcoins are, I think, within the next 4 to 6 months, we'll see very good gains. Bitcoin's moved up a lot since 15.4 thousand, but most altcoins really have not. They've still essentially been ranging in their accumulation zones and slightly breaking out of those zones and downwards resistance. So here for XYO, not too much of an update. Still looking good with this curve, still trading within it along the 50 EMA and its band. Current candle is showing some bullishness right now, which is good to see. But the main thing that I wanted to update was, is the price projection. So at lowest, 9.7 thousand, which is what lines up at 27 cents right here. Then secondarily, 15.2 thousand, that lines up at 42 cents. Third, 39.8 thousand, which is what I was mainly going over in the last update, which is lines up with the approximately $1, maybe around $1.11, $1.10, and then at highest 62,000%, which would put it up to around $1.72. So at this point, I am heavily looking towards $1 to $2. 50 cents is going to likely be an area where I will personally sell a certain amount of my portfolio of XYO just to be safe and just to make sure that I garner at least some sort of profit as XYO continues to go towards the upside here. Now, I just want to quickly mention again, as I said in the last video, it's still definitely possible that around $5, $6, $7 is on the table, but at this point, I'm really just not thinking that's too likely at this point. I only find that $5 to $6, which right here is more like, I think in the last video I said like $5.88 with the calculation that I did, but it depends upon whether or not XYO tops out when Bitcoin hits 200,000 and 230,000, or if it tops out when Bitcoin's at around 180,000. Again, all this is speculation at the end of the day. All of this could not happen, and ultimately I don't know what's going to happen. For all I know, I have no idea what I'm talking about. But anyways, it's around $5, $6, $7 at highest. I only find that on this XYO to Bitcoin chart. Now, when I use XYO to USD and then I go to the coin market cap chart, which has all the XYO to USD paired data, I cannot by any means find it going as high as around approximately $6. It's just not there. It's only there on this XYO to Bitcoin chart. Now we can see each of these various price range and price targets I took with respect to taking trend lines from this prior bull market. So around 34, 35 cents. Right here we see about $1.13, which corresponds to the $1.11 right here, $1.56, and then $5. So I did all of these as this price bubble right, or not, this text bubble right here says I made all these calculations with respect to Bitcoin using 180,000 just to give the low ball values. Now, as the text box says, if using around approximately 210,000, which means if XYO tops out when Bitcoin's around that price, you can increase basically all of these price values by around 20 to 30 cents, except for the $5 one, which would increase, as I said right here, from approximately $5 to approximately $6, so more around like 82 cents. So like 20 to 30 cents right here, we're going to be looking around 54 to 64 cents, $1.33 to $1.43, or $1.53, no, 43, my bad. And then around $1.76 to $1.86. So it's still all roughly the same at this point. Like I said, I think 50 cents to $2 is just unbelievably reasonable at this point for XYO, especially because it's a good protocol. It's a good project, as I mentioned in the last video. Final thing I want to go over for XYO is this bubble that I have right here. So this is when I think it's going to top out Bitcoin, or XYO with respect to Bitcoin. Bitcoin topped out at around 64,000 around March, April, May of 2021. XYO, some altcoins don't really lag that much behind Bitcoin topping out. XYO was one of the ones that did lag a little bit behind, and it made its high more towards around the area when Bitcoin was sitting right here in this range, which is why I did the calculations on this XYO to Bitcoin at 180K instead of 200, around 210K, or even 225K, as I mentioned earlier, due to the fact that XYO is lagging behind. So this again leads me to think that Bitcoin, or not Bitcoin, XYO will top out more. So let's say Bitcoin tops out around like late July, August, maybe even early September is when it's dying off. Like I said, March, April, May. You know, March, Bitcoin's reaching 64,000. April, it's already hit 64,000. And by the time May is here, Bitcoin's dying off and a lot of altcoins are seeing their final burst to the upside. That was something that Dogecoin did, for example. So let's say here that basically July, August, September is corresponded to the 3 months of the prior bull market. So we could look at basically somewhere around like late October, November, early December being the time of 2024 that XYO tops out, if Bitcoin does indeed top out within 2024 rather than 2025. I'm not even going to talk about what happens if it goes into 2025, because, you know, if that's going to happen, I'll get to it towards the end of this year. But I do want to point out that as long as XYO's RSI on the weekly stays above this yellow range, it's going to be quite bullish. This range up here around 80 to 100 will be the range that it likely holds when it's at the highest points of its bull market. Again, stock RSI, as long as it stays in this upper half, great thing to see. MACD is looking good as well. It's finally breaking the 0 point. Ideally, it wants to continue to higher, obviously. And then here for this fib retracement on the XYO to Bitcoin chart, we can see that we're coming down and we're testing the 382. This could be quite a plausible range to find support, not only on the RSI, you know, make it a little bit lower, but, you know, just roughly around the 382. But we're hitting that 382 on the RSI as this XYO, as I mentioned in the last video, this XYO to Bitcoin pair is hitting this very important downward sloping bear market trend line. I think all things are looking quite good for XYO. As long as they're looking good for Bitcoin, it's going to look good for basically all the viable altcoins as well, which should be common sense, especially if you've been looking at the markets for quite a long period of time. So here for JASMY, again, I have no idea where this is going to go. I can't find enough data to extrapolate the price to project it in the future where this may top out at, according to my phase cycle theory, and just factoring in all of the data and the information that leads me to my specific conclusions as to where something may go in the future. But what I want to emphasize in this video is this 50 estimated moving average right here. We can see that now it doesn't show all of it, but just to kind of, you know, extrapolate in the past year, this 50 EMA likely looked something along these lines, where it was, you know, it was rejection right here, and it was, you know, rough rejection right here, clear rejection right here, and then as you can see right here, we've broken above the 50 EMA, and with this recent downswing, we found support on it, and we are now bouncing upwards. Now, you know, it also could have looked something like this, where it kind of cut through the price right here, but nonetheless, you can still clearly see this 50 EMA has been very important. If you're interested in using this and following along, or just, you know, like the way my charts look, this is the Trader's Reality indicator. It's under Trader's Reality Main if you search it up. But so far, I think this is looking good. I think JASMY has strong fundamentals in terms of its protocol. But again, I don't have any idea where it may go. As I mentioned in the last videos, could find some rejection and consolidation at around approximately a penny up to around a penny and a half, pushing 2 pennies, and then maybe somewhere around 5.5 pennies up to around like 13 cents. Those would be some values that I personally would watch out for if I owned any of this. We look here at the RSI, similar to the XYO RSI that I had. As long as it holds this yellow range, it may dip a little bit below, but as long as it just roughly holds this and doesn't get entrenched like it did right here, or right here below it, I think it will continue towards the upside here. And then again, I have around 80 to 100 on the RSI is this being, so like for example, just a likely range, whereas it'll stay within this rough area right here as it ranges. The RSI will bob and weave as JASMY continues to show strength towards the upside here. So here for SIA coin, this is one that does have enough price data in order for me to extrapolate it out, which gives me the price range of approximately 7.5 cents up to approximately 18.5 cents, or just 19 cents. That factors in this bull market right here from March of 2020 to April 2021, which again lines up with my base cycle theory and how I project that onto altcoin movement, because ultimately all altcoins are essentially following Bitcoin at the end of the day. Again, so this is going to be something similar to what I pointed out on the crypto market cap 3 chart, excluding Bitcoin and Ethereum, where you can see all-time high back here in 2018, bear market, you know, getting to accumulation right here. It's staying below the 786, really even the 618, but mainly the 786. And then as soon as it breaks the 786 right here, you can see this white EMA, this 200 estimated moving average, price breaks it, and then the really parabolic bull market begins. And you can see here that we're doing something quite similar. We've already broken the 618, and we're seeing this kind of 2 peaks above the 786, again, similar to how we kind of saw right here. Now, the second peak was at the all-time high. Clearly, we have not seen an all-time high yet, but nonetheless, it looks rather similar. Stock RSI, clearly, as long as it stays in this rough upper range, as I've been mentioning, what we're going to want to see. MACD, again, looks good as well. At our bottom, it's been building up, broke the 0 point, likely will continue to move towards the upside here. Assuming this coin will actually continue to go higher. And at this point, it looks like it will do that. This is going to be a coin that moves, you know, at highest around 8.5,000%. It's one of the lower movers out of all the altcoins I've looked at. Now, again, I could be completely wrong, and it could go far higher than that. You know, it also could, you know, do something like this and end up getting rejected right here and then, you know, die off, basically. I haven't really looked into SIA coin that much. I don't know too much about what it is as a protocol, so I can't really factor that into it. I know I've read about it in the past, but I don't remember because I never invested into this coin. But there's a volume vector range sitting at around 3 cents to 4 cents, so I'd look out for there. If I zoom in a little bit here, let's get rid of these indicators. You can see that we're finding rejection clearly within this this range right here, which you clearly can find why that's important, why we're seeing some rejection right here. We're printing a yellow vector, so that means, you know, we could dip down, especially if Bitcoin does. We could just continue to reach sideways, but we also printed a yellow vector right here, and clearly you can see that prices went sideways and continue to go higher, so that also could happen. Now, if it moves higher, I do think this trend line is going to be important, which would roughly line up with finding resistance with respect to the price back here as well, in a horizontal sense. Outside of that, there's a vector volume zone at around 6.5 cents to 7.5 cents, which would be pushing the lower bound of my all-time high projection. Again, all-time high, I think, around 7.5 cents to around 19 cents. This one topped out last time around with Bitcoin in around April, so I would assume this will do something similar to that this time around, topping out around, like, you know, as I said, August, give or take a month, if Bitcoin ends up following through with that analysis. So here for THETA, first thing, we see this red trend line right here. It hasn't really broke it just yet. There was a very brief break and close right here, but it came back below. Now we're inching up towards it again. You can see this 50 EMA has been very important. Might know, not 50, 200 EMA, the white estimated moving average right here. You can see clearly from the all-time high, price came down. Eventually lost it, rejection, entered the bear market into accumulation, got rejected right here, finding confluence, coinciding with basically this trend line, bear market trend line. So seeing drastic movement above this 200 EMA, which is basically sitting at the previous local high, let's just say roughly around $1.30 to $1.40. So if Bitcoin, or not Bitcoin, if THETA here, would look out for around $1.30 to $1.40. Once it moves above that, there's a massive, pretty big vector volume control zone sitting around $1.70. to $2.40. So it could, you know, for example, you know, do something like this, continue higher. You know, I mean, it also could just blow straight through that and come down and just have a quick retest or long retest and then go up. You know, plenty paths could unfold here. When it comes to the all-time high projection, this is one of the better movers that I've gone over on this channel. Well, first off, the high range is around $126 to $258 approximately. So that's going to be from the lowest low here at lower bound around a 22,776% move, higher bound around 46,000. That again is factoring in my phase cycle theory and the prior bull market from March of 2020 to the all-time high right here at highest, basically 46,000, as I mentioned. If you look here at the indicators, what we will see here is, zoom out a little bit. Again, we can see the 786. Once we start to see the price, or not the price, the RSI move above the 786, typically that's either we're setting a local high as we're leading into accumulation, as you saw right here. We dumped into March, obviously, with what happened around the world then. Then eventually you can see right here is getting above the 786 was highly important. 786 lines up from 80 to the top of this being at basically 95, 96, which is why I was mentioning 80 to 100 on the RSI for XYO and SCU coin. Now you can see here that from the all-time high right here, March of 2021, on the 23rd, the high was set in, we dumped down, bear market, hit the 618 right here towards the end, continue to go down a little bit more, but you can see right here we moved up to the 786 for the first time since losing it back in April 2021. Again, I think this is pretty important to be seeing here. Now it dipped down to the 382, so it's good reason to find some support there on the RSI, which would be strengthening the fact that it's looking like, especially with factoring in Bitcoin, etc., that this trend line is going to be broken over the next few weeks, over the next month to two, and then finally breaking this 200 EMA with some strength here, moving towards the upside. So outside of these vector control zones that I mentioned, so I think approximately $3 to $7, you know, for example, it could do something like this. It could have a quick move up to $3, sit here for a little bit, then move up to $7, $6, let's say $5, $6, $7, and then sit here and then move up to the upside. But there's definitely clear reason to believe that this area right here will see some consolidation and retracements for theta as it moves into those ranges. That's it for the altcoins. Here for the update on the SPX, this weekly chart that I've been updating. So far, it's still continuing to move up. It hasn't really moved up too much since the last time I went over. It's still sitting at approximately 5,000. I still think this bearish divergence is playing out. So far, this RSI has been moving closer to this. I think if it continues to move higher, eventually, again, I think my long-term, I mean, really even, I suppose, short, medium, and long-term projections for the SPX and the stock market in general are quite bearish. I think this will end up playing out. This stock RSI had a massive dump and then a massive gain, which, you know, to me personally, I mean, if, like, for example, if we go back here in the past, we can see something similar right here, and you can clearly see that, you know, it chopped really a lot, and obviously the price continued to move up higher. But the thing is that you zoom out here, the SPX has basically just been going up since March of 2009, and it hasn't really had any significant pullbacks outside of really this one right here, which is only around 35% and only lasted like mid-February to late March of 2020. So I mean, it's really not, definitely not a bear market, and it's really just a drastic and a very quick retracement or pullback at that point. So if we look here at the MACD, now this downward sloping resistance has been broken, but there is some horizontal resistance that it could be meeting here. So, like, for example, RSI is reaching this resistance, it could move a little bit higher, and we could basically see this MACD, you know, maybe it dumps. If I can actually click the highlighter, maybe it dumps from here, maybe it just pushes a little bit higher and then finally rejects. towards the downside. But the main update that I have here for the SPX is going to be this 3-month chart right here. So each of these four pink dots, this lines up with one of the main points of my bearish at the SPX and stock market analysis. If you go back to 2000, you can see January 2000 dump. Fast forward to, well, actually, so we see that each of these highs are happening around, you see January, April, January to April to July. So if we fast forward 7 years, we see right here, January, April to July, we have a pink dot, a dump. Fast forward 7 years later, 2014, we're seeing October 2014, then leading into January, April, July 2015, we saw just a very minor dump, which again factors into SPX has basically been just going straight upwards. You know, I mean, obviously with the tilt going upwards since January 2009, since the 2008 crash. And fast forward from 2014 to 2021, we can see again, we see right here, October 2021, we see January leading into April, July, we're seeing this minor retracement. And we're coming up, and I think we're basically, I'm still leaning, we're going to see, I think we're going to see most likely a double top here. There's also a downwards, a long-term bearish divergence here. You can clearly see the difference. We have the price right now has an upwards resistance, and right here we can see that there's a drastic difference right here. So it's also just a smaller term, shorter term, bearish divergence playing out right there. Now let's say, just to entertain, let's say I'm wrong about the stock market's basically entering a 2008 like crash, or even something like the Great Depression. In one of my past videos, I went over some data from the 1920s and 1930s that the M2 money supply with respect to American currencies is printing a sharp, drastic decrease that it has not done since the 1920s and 1930s, happening 100 years later. Very similar. Fiat seems to be collapsing, and not only overseas, but also in America, the dollar seems to be losing its strength and purchasing power as well. Anyways, let's say that I'm wrong. Let's say the stock market's going to continue to go up here. If we go back to October of 1974, you can see we dipped below, right here, we dipped below, price was going up, dipped below the EMA, the 50 EMA in the band right here. Now price continued to go up, and it didn't really do that again until right here in 2009. So we could see, basically, we could be seeing, if it's not going to be bearish, we could be seeing this massive ABC pattern that could take it up to around $17,000. Again, I don't think that's what's most likely, although it could definitely happen, or it could at least just continue to push a little bit higher. It may not go to 17,000, but it could push higher. Outside of that, so again, just to mention, I think around $2,000 is a pretty good, reasonable range if the SPX does dump. I think at lowest, it will definitely find support somewhere right here in this range, lowest around like $1,200, which would roughly line up with this 200 EMA that we can see right here. So here for gold, I have an even more bearish outlook on gold, which I will touch on in an article after this, which will again touch back on the ETFs that I was mentioning earlier on in the video. So again, gold I think looks even worse than the SPX here. We're still seeing something similar, again, a long-term bearish divergence. Price is going sideways. It's recently been going higher, but the RSI is continuing to go on a downtrend here. Even if you look in the short term, right here in this area, you can see the price is going up, but the RSI is going down. We have a long-term and a short-term bearish divergence. It's been going down for the last like 1, 2, 3, around 6, 7 weeks. Once it loses this purple range, I think it will continue to move to this range right here, and then once it loses that, it'll likely move down to around this vector zone or this lower red box. If you're into gold, I would look out for around $1,930 if it starts to lose that, especially if it starts to lose around $1,830, then it's at least probably going to test the lower bound of this horizontal channel that we can see here with these 3 boxes. Again, with the stock RSI, we're also seeing some bearish divergence going back to January 16th of this year. We're also again seeing it on the MACD as well. Even we're also seeing it long term on the MACD as well, similar to the RSI. So again, just to entertain some upsides here, as I've been saying, I think, let's say gold does have another spike up here. I think, you know, let me actually take the retracement because I forget. We take the retracement here from the sideways action. The 1.618 sits at basically 2,400. The 382 sits at basically 2,300. I think it's possible at highest it would go to that, but I don't even think that's, I think that's really pushing it if it continues to go higher here. But anyways, move on to this article. So we see this was posted, posted yesterday, February 15th, maybe 2 days ago by the time you're watching this. Anyways, so gold ETF outflows top 2 billion. Is the Bitcoin comparison overrated? In brief, we see right here, gold ETF outflows reached over 2 billion in 2024 with BlackRock's iShares Gold Trust ETF witnessing 423.6 million outflows. Bitcoin ETFs have seen a surge within 2024's flows, rising to 11.6 billion since the product's SEC green light on January 11, 2024. Despite the outflows, analysts caution that this doesn't necessarily indicate a shift from gold to Bitcoin, but equities FOMO. So basically what they're saying is it's not necessarily the gold's dying drastically here, but it's the fact that Bitcoin is looking great, technically speaking, and also socioeconomically speaking because of the ETF. So therefore this outflow of gold and inflow into Bitcoin is FOMO. You're missing out. Right here we see outflows from gold exchange traded funds. Top 2 billion this year so far. Somewhat ironically, BlackRock's gold ETF was ranked second largest at 423.6 million, even as its Bitcoin spot ETF inflows reached 5 billion year to date on February 14th. Scroll down here to right here. What gold versus Bitcoin ETF flow suggests the contrast in fund flows between crypto and gold products has been staggering. While gold ETFs have decreased by 2.4 billion since the start of 2024, inflows into Bitcoin ETFs in the last few days alone have totaled 2.3 billion. Bitcoin ETFs, excluding Grayscale's Bitcoin Trust, have seen roughly 11.6 billion in inflows since their approvals on January 11th. This means the takings. Good grief. This means the takings. Wow, they really messed this up. This means the taking over of the last 4 days account for almost 20% of holdings. According to data from January, holdings for gold exchange traded products have declined by around 2%. The final thing I want to go over, let me see if I can, how much I can zoom. Oh, that's not good. Anyways, you should be able to see it enough. So this yellow line we see right here is a gold futures price. And then these blue histograms we can see are going to be inflows and outflows with respect to the SPDR Gold Trust ETF. Now we can see that overall, this the gold futures price seems to be going down in a downtrend. This goes back to, so this is calculating from January, beginning of January this year to where we are currently halfway into February. So we see this in a downtrend, the yellow line, gold futures price. And then we see these histograms lining up with inflows and outflows. Now the inflows are going to be histograms towards the upside. The outflows are going to be histograms towards the downside. Now you can clearly see here that there's basically no inflows and basically everything is in outflows, which again is just, and this is just a graphic reiterating what I've already read. The fact that, again, they're coming to the conclusion in this article, as I said, that, you know, these analysts are saying that it's more likely FOMO rather than gold dying off. Now, my personal opinion would be that I definitely think, obviously, FOMO is a part of this because Bitcoin just looks great for many, many reasons. But I also think it's because, technically speaking, going back to gold here, it just doesn't really look that strong. I think because of the introduction of Bitcoin being dubbed as digital gold, also other blockchain-based cryptographic solutions, I think over the next 5, 10, just over the next number of decades, that basically we're seeing gold transition from being an asset of pure investment in order to make money. It's that, and it's also just a precious metal that has real world use cases in terms of, you know, engineering and creating products and things like that, like for computers and things along those lines. Now, I think what we're seeing here is because of, like I said, Bitcoin and other blockchain solutions, I think we're going to start to slowly see the purely financial investment aspect of gold start to dwindle, where people are going to realize that there's, when you have Bitcoin and you have viable altcoins that have genuine real world use cases with their protocols, why would you, and you can make a lot of the gains clearly if you've been in the space for, you know, at least, you know, 2 years, a year, definitely longer, you definitely understand that the gains in the blockchain and crypto space is far superior to precious metals, gold, silver, and even the stock market, you know. So I think that it's quite likely we'll see the, as I said, the purely, you know, financial investment aspect of gold start to dwindle, because people will start to realize that there's Bitcoin, there's viable altcoins, and why would you invest in something like gold when you can invest in something, you know, and potentially make what you could have made in gold in like multiple years, pushing a decade. You can make what you made in, you know, 1 to 10, or well, 5 to 10 years in gold. You can make that in the crypto space in as little as like a month, or even like just a year or 2 years, less than 5 years. You know, I mean, some of these, you know, like think about meme coins where you can, you know, within the matter of, you know, a week or 2 or 3, less than a month, you know, it could have astronomical gains that, you know, gold took, you know, at least like a year, 2 or 3, if not longer, 5 to 10 years to do what this meme coin did in like, you know, 1 to 3, 4 weeks. But that wraps up the analysis that I wanted to go over in this video. So again, none of this is meant to be financial advice. Really, it's just meant to be educational content. But all of that aside, I hope you all enjoy it, and I hope you all have a blessed day.